But this is what sets the stage for the next bull market, right? Supply gets so constrained, gets so tight that all of a sudden, a small amount of capital flows in and Bitcoin can do nothing but just go up.
Bitcoin expert and Gen Z investor Dylan LeClaire at this year's Baltic Honeybadger conference explains why the race is on to buy Bitcoin, and TradFi, traditional finance like BlackRock, is about to cause a supply shock with this asset.
All right, so this first chart's pretty obvious. Just drawdown for Bitcoin all-time high. Bitcoin notoriously volatile, right? That's kind of one of the main talking points of skeptics, is how volatile it is, right? Okay.
And as Dylan explains, I'm going to react to some of this. And first off, just basic chart, drawdowns from all-time high. We've already had a 75% drawdown from our all-time high a few years ago. Not to say we can't go lower, but when in doubt, zoom out and understand we've already went down a pretty equivalent amount compared to other cycles.
Here's Bitcoin's price, realized price. What is realized price? You can also think of it as like market cap and market realized cap. It's essentially like the realized market cap of Bitcoin would just be all of the supply at the price it last moved, whereas a market cap is just the circulating supply multiplied by the price it last moved. So realized price is just the average cost basis of all Bitcoin. It's the price at whichever UTXO last moved, valued at that price instead of just the current exchange rate, right? And so what you notice is it's a lot less volatile and it's kind of just going up in this lockstep fashion.
So many people say this is sort of a more accurate way to value the network of Bitcoin. Right now, the realized price of one Bitcoin is around $20,000 compared to the actual market price, $25,000. It is very rare that we have ever broken below the realized price. And again, always very quickly at the bottom of bear markets. We'll come back to this. This is all building.
And so we're going to change pace a little bit and we're going to kind of move to what drives these cycles. But here is long-term, short-term holder supply. This is just long-term holder supply, right? So as a percent of circulating supply, Bitcoin that's basically haven't moved in 6 months, UTXOs that haven't moved in 6 months, less short-term holders, less exchanges, right? And so we're basically at like 80%, this all-time high. You can kind of see.
So long-term holders are defined by Bitcoiners who have at least held their Bitcoin for over 6 months. As the data shows, if you hold for at least 6 months, you're in this, you understand, you're not just a trader. And in the dark blue, it's a long-term holder profit, and light blue, long-term holders who are in loss. Notice that there's always a point in cycles that when so many long-term holders eventually do get in profit, that's when they tend to sell. This is a great metric to mark tops, and it looks like that's when long-term holders get to be 60, actually closer to 70% of the network. That's when they usually start selling, take some profits. And on the flip side, those same hodlers tend to set the floor as well. When we get to around 40-45% of long-term holders in profit, they're the ones that don't typically sell at these levels because they're believers. They're going to wait till Bitcoin goes up. They have conviction. And thus, the supply of the Bitcoin long and short-term hodlers in either profit or loss, great way to kind of see potential bottoms, great way to kind of mark potential tops.
You can kind of feel, right, the interplay of like hodlers and the cycle, right? Stack sats, never sell. All of a sudden, there's just not enough Bitcoin to go around. Some capital comes in, and Bitcoin's price goes parabolic. And to the mainstream, media, or to the legacy financial analysts, it's this random thing that comes out of nowhere, and no one can expect it, right? But really, right, like hodlers set the floor. That's actually happening, and that doesn't stop, minus 20% daily candles. Doesn't stop, some like massive liquidations or wipeouts. But this is what sets the stage for the next bull market, right? Supply gets so constrained, gets so tight that all of a sudden, a small amount of capital flows in, and Bitcoin can do nothing but just go up. And you can kind of see that, that long-term holder supply draws down into these parabolic bull markets. What's that saying? Well, you stack for 3 years, Bitcoin 5Xs. You take a little bit off the top. That makes sense, right? Okay, so, one of the popular narratives and what I was trying to show with this previous chart of kind of that holder supply becoming more constrained and then drawing down as Bitcoin goes parabolic is, often like the halving is attributed to like Bitcoin's price runs.
So while we've been talking about the supply side, the demand side, obviously equally as important, and this is essentially showing global liquidity. So again, comparing traditional finance and this new asset Bitcoin. And based on the data, Bitcoin has always had a correlation to the amount of liquidity globally in the system.
It's like, oh, well, halving happened, number go up. And, admittedly, stock to flow is, very great for showing that kind of absolute scarcity. It was, one of the things for me in high school. I saw the stock to flow ratio and was like, well, great. The difficulty adjustment, what is all this stuff? And it kind of sent me down a rabbit hole. I won't lie, it's good content, but it's not really, we have so many other things to look at as to what's actually driving this. And the halving is a really, pretty, oversimplification of what's happening. So here's global M2. It's taking a bunch of different, the M2 money supply of a bunch of different nations, putting it in dollar terms, so not the local currency, it's normalizing in dollar terms. And then the middle pane is the year-over-year percentage change, right? And you can kind of see when there's a massive expansion of the monetary supply, and admittedly, M2 isn't the perfect measure of money supply. It takes into account bank reserves and all this, financial jargon, whatever. We're not going to get into that. But really, the rate of change is what is important here. That's what's, kind of what you should take away. And look at that rate of change of the money supply, the global money supply in dollar terms, and the Bitcoin price, right? There's something there. Coincidence or not, who knows? But there's obviously something happening there with that chart, right? Bitcoin's, just recently became this macro asset, but it's kind of always been one, right? Even though there wasn't, the big TradFi funds and Larry Fink talking about it, and 5 years ago they were saying it's a money laundering index, and now they're saying, oh, Bitcoin's a global asset. Well, Bitcoin's always been a macro asset, right? It's always kind of gone with the tide of this.
And again, for me, sort of interesting how this has marked the bottoms, just like, and very correlated with the tops. Zooming in today, we are starting to see the pickup again.
So here's Bitcoin and the US PMI, Purchasing Managers Index. That's just a month-over-month change of basically manufacturing activity, right? Above 50 is expansion, below 50 contraction, right? So you can kind of see that with the green and the red. And you can kind of see that also, aligns with the Bitcoin cycle, right? So just another kind of one of those things that Bitcoin has actually been, with this interplay of the TradFi cycle for a long time. This is not a recent development. So, it's like, oh, it's the halving, and Bitcoin's this asymmetric thing that has no relation to anything else, right? It's uncorrelated. Well, not really, and that's not a bad thing. And I'll explain why in a little bit.
So this one, pretty self-explanatory.
All right, so here's global debt. I'm sure everybody here is familiar with the talking points of fiat's going to devalue forever, and it is. It's a mathematical certainty. That's just how the credit-based system works. It needs to expand forever. Otherwise, it's going to collapse, right? It's a debt-based, fiat-based monetary system. So, it would be better if this was shown in log chart, but I actually do like the linear chart here to kind of show that exponential sort of debt burdens. This cannot go down. It just can't, right? The only way to pay all this debt down is more debt, paradoxically so.
So this is where we start to build. Dylan is about to make the case that traditional finance doesn't have a choice. Global debt is so out of control. The fiat money system is so broken. They need hard assets like gold, like Bitcoin. Doesn't have to be just Bitcoin. But the traditional system is broken, and the race to buy Bitcoin has already started. Nobody
really knows. This is just an estimation. They have no idea. Right? No one has any idea how much debt's out there. It's a complete black box, which is fine. We accept that. But if you just think of Bitcoin, right, this little $500 billion blip.
Look how small Bitcoin's market cap is compared to the rest of things in the world.
Right? This is U.S. equity markets, U.S. public debt, gold, Bitcoin. I could have added, other equity markets. It's all just kind of an estimate. Right? Bitcoin's just a blip. It doesn't matter. Tiny little blip on the asset side of the balance sheet. And right now, essentially, it's just a bunch of laser-eyed Bitcoiners that are stacking sats and preaching Satoshi's gospel to their family members at Thanksgiving, and people think they're crazy, and for the most part they are. But it's relatively irrelevant on the global balance sheet, right? And every boom and bust cycle that we've seen, if we go all the way back to the first slide, every single boom and bust cycle we've seen is mostly just like, the first one is like cypherpunks and nerds, and Bitcoin's exchange rate wasn't a joke, it was just a joke, and it was just Mt. Gox. And the second one was like drug dealers and Silk Road users and like the cutting edge of like software developers. 2017 was like the first like speculator cycle really that hit the mainstream. The crypto natives-ish, and all the altcoins came about, and it was like first time it was like more of like a financial asset than anything. I mean, it was always obviously a financial asset, a monetary asset. First one hit the mainstream, and 2021 was the first time it was like a real macro asset, or at least perceived as such. Obviously, there's people that have always kind of understood that this was the natural trend, but these are kind of the development phases of the cycles.
And this is all building to something. Stick with this. Dylan about to explain why traditional finance will have no choice comparing volume of negative yielding debt and Bitcoin. Dylan about to absolutely cook.
Now we're going to go I guess we can go to this one, but still talking on that balance sheet asset to liability side of things. Right, so what is Bitcoin doing? It's monetizing, it's growing in value, 5x, 10x every 4 years. I mean, that's not a given, right? But that's kind of the trend. Even if it diminishes in its percentage growth terms, which it will, which it already is, it's monetizing, it's growing on the asset side of the balance sheet. And what is this fiat game, this fiat system of perpetually expanding credit, perpetually expanding debt burdens, right, as we've shown? Well, it's essentially this just a boom-bust cycle of an asset bust cycle, a business cycle, and the more and more debt that we stuff in the system, the more extreme the deleveraging's become, right? So in 2022, Bitcoin kind of had its own, and as it's had plenty of times, crypto Bitcoin had its own deleveraging, right? A bunch of yield firms went bust, and hedge funds, and neobanks and whatnot. We kind of saw a similar dynamic in the legacy system with a couple banks. They also happen to be Bitcoin crypto banks. And long duration bonds went down 30%, right? And we still probably see a recession. Everybody knows about '08. Everybody knows about the tech bubble, right? So these asset bubbles are a function of human psychology. It's not obviously native to Bitcoin, as we all know. So when you think about the maturation of Bitcoin as it increasingly becomes financialized, and that's kind of maybe a bad word for some really cypherpunk style maximalists, which I understand, right? Don't buy the BlackRock ETF, right? Buy your own Bitcoin, hold your own keys, non-KYC, BIS, HODL, et cetera, right? 100%. But the suits are coming, and they're not going to buy on BISC. They're going to buy Larry Fink's ETF, and that's fine. And let's go through why. So here's just, this is another example of kind of the craziness of the past 20 years, right? Negative yielding debt, not in real terms, not adjusted for inflation, before inflation, right? There was $20 trillion of debt instruments where I'd give you $100, and then 20 years from now, including all the interest payments I got, I would receive 99 back total, right? So you can kind of see that Bitcoin, the relative trend of this negative yielding debt, the size of this negative yielding debt, Bitcoin mirrored it quite closely. Now with this interest rate rise, with long duration debt getting absolutely killed, there's almost no nominally yielding negative yielding debt. So before adjusting for inflation, there's really no negative yielding debt out there anymore. And obviously you see Bitcoin crash at the same time. But in real terms, there's still a whole bunch of debt instruments, right, adjusted for inflation in hindsight, that's not going to give you a positive ROI. Here's another kind of comparison, right? Major central bank balance sheets, Bitcoin's market cap percent. Okay. And obviously, major central bank balance sheets have gone up and will continue to go up because there's going to be a whole bunch of debt issuance. The ETFs, right? Some people have different opinions on them. They're coming. They're definitely coming, right? Larry Fink, all of them. BlackRock, iShares, Vanguard, they're coming. The investment banks, there will be Bitcoin ETF. Right here, I'm showing, this is a BNY Mellon slide, a huge investment bank, $50 billion bank, right? This is showing ETFs and equity as a percent of their collateral, right? So collateral in the banking industry. And again, I'm not a bank of TradFi simp here, but they're coming, and this is what they do. This is a Goldman slide, right? You can leverage equities, ETFs as collateral and borrow basically at Fed funds. Up to $25 million. This is for private clients, right? So what are we transitioning from here? We're transitioning from crypto degen trading, crypto collateralized, Bitcoin, Luna, Celsius, Binance, degenerate crypto leverage, right? To Bitcoin entrenching itself on the asset side of this global balance sheet of $100, $200, $300 trillion fiat liabilities. Bitcoin's monetizing on that side, right? So, last point, and I'll wrap it up here. One of the main opponents of the ETFs are bad, right? The financialization of Bitcoin is bad. Well, look at what happened to gold, right? TradFi basically neutered gold. It's fair. It's a fair statement. The paper markets for gold. Well, you can't teleport gold. You can't settle gold instantaneously or in 10 minutes across the world, right? So these paper distortions never really get resolved. They can continue to play these paper games. Whereas, say, with Bitcoin, right? Here's Bitcoin spread.
So very interesting comparison here between BTC's market price and then the spread, the amount of people trading BTC CME futures. Yes, trading and futures manipulate price, but even when those traders are irresponsibly short, they can't fight the spot buying, meaning they can't suppress BTC even though they try.
Bitcoin spot price, CME futures. You look at what happened post-FTX. CME futures was trading at like a 5% discount relative to the spot market. And what happened, right? These guys all got wrecked when Bitcoin started to pump. So the data now is saying, at the very least now, is saying that even though CME is like 25% of futures volume, of futures open interest, and remember, CME is non-Bitcoin settled. It's a futures contract, but it's settled in cash. Right, you park treasuries as collateral to trade Bitcoin, and it settles in cash, right? So is this bad? Well, good or bad, they're still not suppressing the price, right? Up or down, they're going to have to settle, and that spot rate is really what matters.
Be sure to click the like button today if you got value. And now Dylan brings it home on why Bitcoin buying, TradFi getting in, is inevitable.
This is literally the Congressional Budget Office from the United States, their projections for debt to GDP and deficits as a percent of GDP. This is their best estimate. Like, they're padding the numbers here. Best estimates, right? So the debt is going up forever. The dollar is going down forever. That sounds like an outrageous statement. It's not. They're telling you this. There's been 52 instances of countries over 130% debt to GDP ever. And 51 of them have defaulted, explicitly or implicitly, either by not paying their debt at all, just saying, sorry, I can't pay you, or just currency devaluation is how you get out. The US has a money printer, so it's going to be option 2. They're going to devalue the hell out of the currency. So this is to say that Bitcoin is going to nestle itself on the asset side of the global balance sheet. It's going to continue to get bigger and bigger and bigger, and this is our Trojan horse. The ETF, investment banks, yes. We're going to encourage them to come in. They're going to nestle it on the asset side of their balance sheet. Instead of paying down the liabilities, it's going to grow as a greater and greater share of that asset until it is systematically important as an asset, just as housing is, just as equities now are, as on the asset side of that balance sheet, right? Equities are systemically important for US individuals, pensions, 401ks, et cetera. Right? So Bitcoin, this is a natural progression. There's nothing we can do to stop it. And it's a welcome development. It's a natural path of its monetization.
If you haven't already, be sure to click subscribe. We drop 1 video per day, keeping you informed about crypto. Also, a personal announcement for me and my brother. I'm excited. Next weekend, we will both be in Singapore for major conference Token 2049. We'll be doing a live episode of Killer Whales, that crypto TV show that has not aired yet, but it will. For those of you in Singapore, be sure to join us. And also in Amsterdam next month, Edward Snowden, as you know, speaking at the Bitcoin Amsterdam conference. Link down below. Use code Altcoin Daily for 10% off your ticket. See you tomorrow.